Welcome to Morningstar's 3 Stock Picks. I'm Holly Black. With me is Andrew Ness. He's manager of the Templeton Emerging Markets Investment Trust. Hello.
Hello. Good afternoon, Holly.
So you've got 3 stock picks for us from across the world, across the emerging markets world anyway. Where would you like to start?
Let's start in South Korea. We'll talk about Naver. Naver is one of South Korea's leading internet companies. So think of it as a mix of Google and Amazon. So it's the country's dominant search engine. It's got greater than 70% market share. So that's the Google part. But it's also successfully integrated search with payments and commerce. And it's evolved into one of the country's leading e-commerce platforms. So that's very much the Amazon part. Now, in addition to those businesses, they've also got majority ownership in a company called Line Corporation. That's a leading messenger platform in Thailand, Indonesia, Taiwan, and Japan. That business is currently undergoing a merger with Yahoo Japan, and that's going to bring new synergies which will accelerate the path to profitability for that business. Then elsewhere in Naver, we see significant growth potential for many related platform businesses, and that includes financial services, entertainment, music streaming, videos, very similar to the types of packages you get from Amazon Prime these days. The stock's performed very well this year. It's up over 70% in sterling. It's seen as a beneficiary of COVID, yet our forecasts are for continued high revenue growth, margin expansion. So we're still very much happy holders of the stock today.
Okie dokie. On to stock number 2.
Our second stock, TSMC, or to give it its full name, Taiwan Semiconductor Manufacturing Company. It's the world's largest semiconductor foundry, and that means it makes semiconductors for other clients, including most of the world's leading fabless semiconductor companies such as AMD, Apple, Broadcom, Qualcomm, etc. And the semiconductors that it produces, they're very much driving the digital revolution that we're all living through. They're on track to be leading edge in their technologies. Leading edge, they talk about 5 nanometer development, and this is where it gets really interesting. So 1 nanometer is a billionth of a meter. So how long your fingernail grows in a second is 1 nanometer, and the human hair is about 2.5 nanometers in diameter. So that's the geometries that this company is working with in terms of sophistication. The stock's done well. It's up 30% year to date in sterling, but we're very confident on its future growth prospects.
Okay, and we'll go on to stock number 3 while I try and get my head around those nanometers.
Sure. Stock number 3, much more simplistic business. It's called Brilliance China. It's BMW's joint venture partner in mainland China. So our thesis here is one of low penetration of premium automobiles in China and continued demand for BMW cars. The stock's not been a strong performer this year. The car purchasing environment's been weak, as you may have expected, although they do continue to outperform the local market in sales volumes. It's trading very attractive levels, and we continue to like the name.
Well, you've stolen my point there, because I was going to say it's a really cyclical industry that is hit in times of recession. When do you expect a bounce back?
We're seeing recoveries already. As soon as society got moving again in China, we've started to see the forecourts open and people moving to buying cars. And if you think about the impact of COVID, people are shying away from public transport. So it's encouraging more use of individual transport solutions. So people, potentially buying more cars. And it kind of rejects the thesis that we were all going to be doing shared autonomy over the next, a couple of coming decades. So it's very much been a beneficiary of COVID in that sense, although yes, it has been cyclically weak in the most recent time.
Andrew, thank you so much for your time. For Morningstar, I'm Holly Black.